What's up, Investment Club? Want to give you guys a quick update. We've got a pretty good pop today on Tesla stock, up $25 right now, or a little over 3% to around $740 a share. There's three reasons for that. We're going to run through real quick what the recent news is, having to do with ARK Invest, Cathie Wood, a deal with BYD, and then I want to shift gears a little bit to a less talked about company called Scott's Miracle Gro that I'm going to be getting assigned some shares of in the coming next week, and how I actually plan to turn that into a passive income generating position through options and dividends that should get me somewhere around $600 annually in passive income. So real quick, let's start with Tesla and the news from Cathie Wood and ARK Invest, who is buying Tesla shares. They've purchased more than 55,000 shares since May 23rd. There's really not much to say here other than, you would hope that this company is buying Tesla shares with the price targets they put out. If we just take a quick look, their expected price per share for Tesla 2026, they're expecting $4,600 a share. So, when a company has this high of a price target, you would hope that they're buying shares here. And, they've taken some flack from selling as of late. A lot of that has to do with, rebalancing and ensuring no position gets over 10% of their portfolio. But it is good to see that ARK Invest is buying Tesla here. Because it is, a company that they're probably most well known for and how bullish they are on Tesla. So if you're touting a $4,600 price target, I would hope you're buying the shares. Really not much more to say about that. In other news, though, we've got news from BYD. They're going to start supplying batteries to Tesla very soon. Senior executives said they're going to be supplying Tesla with the batteries very soon, caused BYD stock to jump. So BYD, another EV and battery maker based in China. So rechargeable batteries made up 7.2% of BYD's revenue in 2021, dwarfed by the more than 50% that they make from automobiles and related products. I think that there's a lot of positives we can read from here. For Tesla, definitely. The executive vice president of BYD's automotive engineering, had this to say: Tesla is a very successful company no matter what. BYD respects Tesla and we admire Tesla. We are good friends with Elon Musk. We will soon supply him with batteries. We are friends. So, good to see that Tesla seems to be maintaining a good working relationship in China, which, there is a lot of risk on China. And I know that this worries a lot of people. You just never know what the CCP is going to do, or, if they're going to start favoring their own, domestic EV makers over Tesla. But thus far, it seems to be, a mutually beneficial situation. China obviously wants to be the EV leader, wants to create a sustainable future. Obviously, they are plagued with pollution, and who better to help them get there than Tesla and also the rest of the world. So far, despite all of the FUD in the news, Tesla seems to be doing just fine. China's been their best export hub and vehicle factory overall, with the sheer supply of cars that they've been able to pump out of there. Elon had said in one of the previous earnings calls, Tesla in 2022 could hit 1.5 million vehicle production, and that production could come out of just Fremont and Shanghai alone. Which is crazy to think about, not even accounting for the Gigafactory in Berlin and Austin that they're ramping up now. Now, obviously, I think things have changed a little bit with the Shanghai lockdowns, unfortunately. Many are expecting a bad quarter from Tesla here in Q2. But, I think this is just a short term, going to be a blip on the radar. In the long term, really doesn't change anything. They may have one bad quarter where they miss delivery estimates because of these, mandatory Shanghai lockdowns, which have now been lifted. But this comes after the rumors that Tesla was testing BYD's new Blade batteries for a potential supply partnership last year. Now, there's two things that I think you can read out of this, both of which are positives for Tesla. Number one, either BYD is producing too much supply or that they have an oversupply of batteries for their own vehicles, either of which is great for Tesla because Tesla is not demand constrained, they're supply constrained. So getting, additional batteries from wherever they can get them will only help them to produce more vehicles and meet their demand, which they have been unable to do thus far. And it doesn't seem that they're going to be able to, through the rest of 2022, at least. The demand far outweighs supply still. So the more batteries they can get, the more cars they'll be able to build and get to the customers who, wait times now stretch anywhere from 3 to 6 months, or if not more, well into 2023. Good problem to have, but we hope to see that their production continues to increase, which I think it will. They're targeting that 50% growth year over year, which they're pretty much on track to do, it seems like. Now to Scott's Miracle Gro. Their stock is down almost 10% today on, they just, decreased their guidance. Kind of comes on the back of similarities we heard from Target, and consumer preferences are shifting. Obviously, a lot of these companies are now facing oversupply issues, which there's two ways you can look at it. I think that we're just kind of seeing things normalize as things get back to normal. The last couple of years, consumer trends have not been they've been far from normal with all the money and the stimulus checks and everything else. So people are definitely going to cut back and or move their spending as we head into summer here, probably more based on travel, things of that nature. But with that being said, I think Scott's Miracle Gro is fine long term, and you could see it bounce back by the end of the summer. I mean, this is a company that makes the majority of their money in 2 seasons of the year, 2 quarters, obviously the warmer ones. So I'm sure that things will level off, and this stock could come back. With that being said, I had sold a put on Scott's Miracle Gro, so I'm going to be taking assignment of some shares at around $140 a share, and so I'm just going to show you guys what I'm planning to do here. So Scott's Miracle Gro, they pay a 2.83% dividend yield, comes out to 66 cents a quarter, or about $2.64 annually. So I'll be taking assignment of 100 shares. So just from the dividend, I'll be making $264 annually from Scott's Miracle Gro. Completely passive income. Now, I'm also planning to sell some calls on my shares. So I'm going to take assignment on June 17 because I don't see the stock getting back to where it went. I had 150 strike. I had sold this put a long time ago and basically rolled it, and I'm just going to take assignment here. So my cost basis will basically be $140 when you factor in the $1,000 in premium I was paid for the contract. So I'm planning to sell call options on Scott's Miracle Gro. So let's say if I went with the $130 strike for July 15, that would pay me 50 cents a share or $50 for the contract. Low delta here. I like to go for, 0.05 or less delta so that, the shares don't get called away. And obviously I want to recoup my money. The lowest I would want to sell it is probably around the $140 or whatever my cost basis ends up being once I'm assigned the shares. Anyway, if you guys have interest in options, let me know in the comments below, and I could talk more about, how I use this strategy to try and make a little bit of additional income on the side. But so I'm planning to sell, let's say, that $130 call. So that would pay me $50 as of today. And if I could do that monthly, because that was something that will expire, let's say, a month from now, July 15, a little more than a month. If I could do that monthly, $50 times 12 months, that would be an additional $600 in passive income I could make. So when you accompany that with the dividend, we're talking, almost $900 that I could make while I hold these shares. And, if they get called away, they get called away. Ideally, I'll know for sure. I think my cost basis when you factor in the premium will be just under 140. So we'll see what happens there. I plan to, sell monthly calls on that and see what happens. And I could just use it, make some extra income every month. That's what I'm all about. Use that to pay my bills or pump it back into other stocks that I want to buy. But options are very interesting. I've been learning options over the last couple of years. I like the selling options end because I like the idea of making some additional passive income or generating additional income. It's basically like dividends, but you do need a lot of capital to play options. So I'm trying to, get to that point. People who are just beginning, probably best to avoid options. But it's something, I think long term, there's people I follow, like if you had, for example, $1 million in cash sitting around, you could generate stupid income off of options because, let's say Scott's Miracle Gro, if you had nothing to spend your cash on and you didn't mind getting assigned, you could start selling $90 Scott's Miracle Gro puts, basically get paid for, while you wait for a better price. And in the meantime, so you could do that monthly. And Scott's Miracle Gro, I think options are best suited for if you're looking for the consistency like I am, stable dividend paying stock. So an even better one could be something like Home Depot. If we take a look at Home Depot, currently sits around $300 a share. Home Depot is a company that's not going anywhere. And if you have the money sitting around, so you sell a put, let's say on Home Depot, $280 strike, let's say, get paid for it to come down while you wait for it to come down a little bit. So you could sell a $280 put on Home Depot, make $335 in premium, and basically get paid while you wait for a better price to buy in. Let's say if you wanted the $280 strike. So it's just another way, I think, to add some income and potentially just wait for better prices. If you're using it on companies that you don't mind owning, as long as you have the cash to back it, you can run into problems. People who use margin, especially in this market downturn. I had a little bit of leverage. I took all that off the table because the market, it's hard to make money with options when the market's crashing. But like I said, if you're looking to hold these stocks, especially dividend stocks, you could buy a company like Home Depot. You could sell options on it to, wait for a better price to purchase, you get paid the dividend, and then you're selling calls. All of a sudden, you can generate lots and lots of passive income. So this is a strategy that I'm looking to employ more and more. I just am, building up my cash reserves. I also have companies that I have my eye on that I want to buy more of if they continue to go down. So if you found value in this video, if you enjoyed this today or learned anything, please don't forget to like, subscribe, and drop me a comment below if you have any questions. This is Vinny from the Investment Club, and I'll see you next time.